let's just dive right into it. So let me go ahead and share my screen. All right. So I want to start at the top because I received a couple of questions pertaining to how to track what I call extraneous money on Ivy. And extraneous money is a great thing. It's something that we all wish to have one day. But these three questions specifically pertained to how to track referral fees, how to track a gift certificate that was given to a client and for a design service. And another one was about donated time. So one designer had mentioned that she donated a gift certificate to a school auction, and now the client is redeeming that certificate. So this is something that might come up day to day or from time to time. So let me just dive right into it. And I'll start at the top with referral fees. So this, I actually had wanted clarification, but I'll go into two various referral fee structures that you might run into. So the first one that I wanted to know was, does this refer to a vendor kickback, like a vendor referral fee, where you are connecting either a service provider to your client and your vendor is giving you money back? Or is this pertaining to a client who is sending along a friend who subscribed to your design services? Either way, you would not actually want to track the money from within that specific project pertaining to a client. Because the money, it's a separate form of income. It's essentially, I would call it commission, or you can even call it referral fees. So the best thing to do in that case would be to create a new project specifically to track your vendor referral payments. Here, if you work with one vendor or service provider that you are consistently getting referral fees from, you can even add them as a client over here. Because essentially, just to give you the logic of what we're going to be doing, we're going to be creating an invoice for this referral fee. So instead of creating a new project, I'm just going to go into an existing project that I have here. And here you would want to collect this kickback or this referral fee that you are collecting, that you are pocketing as an invoice. Because an invoice is an official document of income and it records all the money coming into your firm. So here what you could do, you can add a service. And you can even call the service referral fee, or you can call it commission, whatever it is that makes sense to you. And you can categorize this. So you can even create a new category here if you want to track specifically how much money you're bringing in from referrals. So here I can even call this commission and add my description. So I'm going to call this $200 referral fee for client XYZ and add my price. Now, depending on how you collected payment from your vendor, because again, we're talking about vendor kickbacks right over here, all you need to do is save this invoice. And if this is something that you could send to your vendor to pay you, fantastic. Of course, remember that we associated our vendor as our client here because they are the ones that are paying us this time, which is a little bit of a mind trip. But you can also just manually record the payment. So let's say they gave you a credit card payment offline, or they paid you by check or money order, whatever it is. You can always just click add new payment and record the payment that you received. So again, remember here, the logic is we want to track specifically how much money we're making from these referral fees, from these vendor kickbacks. So we're creating a new project, assigning our client as the vendor who's paying us this referral fee, and we're creating an invoice for that vendor. We can send it or not, but we still want to have a record of this money coming in. Okay? And you can do the same thing for client kickbacks. Like it just depends on how you are doing this. So if you're paying a client, that would be treated a little bit differently rather than money coming in. Okay. So the next type of extraneous income I want to talk about is came from a question from Tess, and she asked, I believe she was the one that asked how a real estate agent that she's worked with gifted her client, a mutual client of theirs, a $500 gift certificate for Tess's design services. So she asked, how do I record that on Ivy? So the first thing that I would do is for this new client, not the real estate agent, the mutual client that you have that is now subscribing to your design services, I would create a project for that client just like you normally would. And because this is a gift certificate, I would actually record this as a retainer payment. So what I'm going to do is I'm going to toggle over to credits and retainers over here and click request new retainer. You'll see my client is associated with the client to which the real estate agent referred me to or gave the gift certificate. And I can name this retainer gift certificate from real estate agent. And in this case, it was $500. I simply record it as a retainer. And the beautiful thing about any document that you create on Ivy, whether it's a proposal, a retainer, an invoice, or a PO, you don't need to send this to your client if you have no need to. So in this case, this retainer, we already collected the payment from our real estate agent who bought the gift certificate. So all we need to do is record how that payment was made to us. So here I can select check, cash, wire transfer, however it is that she paid for this gift certificate, and add my reference number. You can even add the date on which it was actually paid. Now, this is not something that the client sees because it's not published. It hasn't been sent to them. But now you'll see in the Madison Park project for this client, we now have $500 of a gift card balance or a gift certificate balance. And retainers can be applied as payments to proposals or invoices. So now just work as you normally would. Collect your fees for your design time, sell products, do what you got to do. And when it comes time to it, all you need to do is manually record a payment using that retainer. So I'll show you an example here. I have a couple of items on this proposal. All I need to do is manually record my payment, record my received payment as applying a retainer. And you'll see over here, I have the gift certificate from the real estate agent. I have $500 left. I can apply the full amount. I could choose however much I want to apply, whatever it is. Simply create the payment. And now the balance due to your client is less. It's $250 less. We still have $250 to use, which we can apply on forthcoming proposals or invoice payments. Okay. So that's the way that I would record it. If you do have that gift certificate that your client is trying to redeem. And then what's great about this, if you are connected to QuickBooks Online, once you apply this retainer payment to an invoice, you'll be able to reconcile it with the payment that you originally received from the real estate agent. Okay. All right. So last kind of extraneous money or donation. This question came from Helen, I believe. Helen asked, she said she donated a gift certificate for design services. I think it was $250 or for whatever it is. And she asked, how do I record this? So the first question is, do you want to record this as a cost to your business? Because if so, the way to record any cost in your business is by creating a purchase order. So in this case, you can create a project called donations. Let's say you're a super generous firm. And you'll be able to see that there's actually a negative, essentially a negative money coming in because you're not actually collecting any money from donations. It's all money going out. So you would want to create a PO only if you want to record it as a cost. But if you sold $250 for a gift design time for a gift certificate, honestly, the easiest way for you to do this and record that money in use is by marking the hours that you are going to be billing your client as not billable. So the way to do this is, let's say you charge $125 an hour and you are giving your client 2 hours for free. All I need to do is, because that's the $250 certificate that they purchased, all I need to do here is go into my time billing section, go to my specific project, add new entry, and I'll associate this with my designer fee. In this case, I'm going to just leave it. I'm going to change it to $125, log my hours, and you'll see this checkbox over here which says billable. All I would do here is just mark that as unbillable, meaning we're recording the time. We're able to show our client exactly what this is for, showroom shopping, whatever it is. But we are also showing them that they got 2 hours for free. And I'll show you what it looks like on the invoice. All I need to do here from my timesheet is select this item that I want to create an invoice for, generate an invoice. You'll see the cost is 0. But when I go to save it, they're also able to see that I actually worked 2 hours and they are getting $0. In this case, I would include in the description or in the memo saying, this is the redemption of your gift certificate for the 2 hours. That for me is the easiest way to show this donated money in Ivy, because essentially you are working for free. You did donate 2 hours of your time, just record it as such. The alternative, if you do want to record a discount of some sort that you were showing, would be to create a negative line item on an invoice or a proposal and just call that discount. So you could say minus $250. That's money that you're eating because you donated it. So you could do that on a product or services proposal as well, or invoice. Okay. Perfect. Okay, so I'm going to move on to the next point. And for those who ask these questions, I know, Anne, you asked a question about this. I got, I believe, a question from Kelsey about making payments to third-party vendors. And I got a question about the profitability report, which I'm going to answer a little bit later. But I highly recommend watching my webinar from last week, which was called Setting Yourself Up for Success on Ivy. You can access it in our Ivy Training Center. It's an hour, but it's really informative, and it actually does cover some of these points. So I don't want to make this repetitive if I do have viewers from last week, but I think that it's really important to answer these questions. So the first question came in from a user who was asking, why and how do we use POs in Ivy? So in order to understand what a PO is, it's important to know what an invoice is. Because as I just mentioned before, an invoice is a document of income. It shows the money that you are collecting from your products or services or your time. It is your official declaration to the government that you are collecting money which you owe taxes on. On the flip side, a PO, you could think of invoices as money in and a PO as money out. A PO is actually the money that you are paying out to a vendor. So what you'll notice when you create an invoice in Ivy, it will have your cost inclusive of your markup. As soon as you convert that invoice into a PO, you'll see that the unit cost is the only thing that carries over. So you are not going to be showing the markup that you sell to your client, to your vendor. And it's important for you to create a PO even if you are not sending a PO to an online retailer. Somebody else asked about, I work with online vendors like West Elm. Do I need to create a PO? Absolutely. You need to show what money you're spending out. Otherwise, what it looks like is you're selling a West Elm couch for $8,000 and you bought it for $6,000. If you don't create a PO, it looks like you just made $8,000 of income, of profit, when in reality, $6,000 of that belongs to West Elm. So the only way to see that, the only way to understand what your true bottom line is and to see the money in versus money out is to create a PO. What's important to know, you don't necessarily need to send a PO to these vendors. So again, for those vendors like West Elm, Restoration Hardware, Wayfair, whoever it is that doesn't actually work with POs, just create it and record a payment. And I'll go through this process a little bit right now because somebody else asked about moving from approved proposal to invoice to PO. So I just wanted to give kind of a quick overview, but we'll go over this process right now. Okay, so I'm going to go back into my Madison Park project. And I'm going to start from the proposal process. And again, I really recommend watching my webinar from last week. It goes over this entire process in full detail. So I'm just kind of going to go over this a little bit faster than I did last week. So here I would create a new proposal. I'm going to choose a couple of items here from my project drafts. You'll see that my markup is included, and I can assign these to a room. So I'm just going to create rooms here. And, we're going to go into this a little bit later when we're talking about some best practices for specific reports. But I just want to show you, because I will reference this later, you can request a deposit on the proposal, which I highly recommend. Perhaps it was Kelsey, somebody asked, what is the purpose of a proposal? And especially as it pertains to our integration with QuickBooks Online, a proposal is really important because, like I mentioned twice already, an invoice is your official document of income. It is what declares the money that you owe to the government, and you don't necessarily want to manipulate those documents very much. Proposals allow you to do so. Proposals give you the estimate. They give your client the estimate. And if anything should change, you change it on the proposal, no problem. And as soon as you're ready to collect that final payment for the remaining balance, convert it to an invoice. But here, what's so great about this is you can request a percentage deposit. So I'm going to request 100%. I always recommend taking a deposit payment on the proposal, specifically 100%. You want to protect yourself. You want to collect that payment before you're ever fronting payments for your client. So take that money, put it in your pocket, and as soon as you need to spend it and convert it to an invoice, the payment will transfer over. So just again, for intents and purposes, what I'm going to do here is I'm going to put approval per line item. And I'll say that my client declined this item. I'm not going to show you on the client side what this looks like because I just want to get through this part. But I want to show you what's really cool down here. Because I requested 100% deposit on the proposal, my deposit changed as soon as my balance changed. Okay. So I'm going to record a payment that I received. My client pays me by check, let's say. And I'm going to record the full payment for the full amount. So the question here was, how do you create a PO? Why should you create a PO? And how do you move from approved proposal to invoice to PO? Again, watch my webinar last week. But what I would recommend doing here is my recommended workflow is proposal to PO, back to the proposal to invoice. Now, remember what I just said. An invoice is a document of income. A proposal is the document that you can manipulate and that you should manipulate. You can mess around with this all you want because you're not officially declaring this money yet. So what I would do is I would create a purchase order from the proposal. Again, this is simply my recommended workflow. You do whatever works best for you. Ivy empowers you and gives you that flexibility to do so. Here, I'm just converting this one to a purchase order for Leloy. And let's say my Leloy rep, I don't know, or let's say this was West Elm like I just mentioned before. I don't need to send this out anywhere. The important part is that I'm actually creating the document, because now I'll be able to see what money came in and what was paid out. So always create a purchase order, no matter what. And again, you don't need to send it. You can if you want to, but it's important for you to record the payment, because what Ivy enables you to do is record and track everything across its entire life cycle in your project. And one part of that is making sure that an item is paid for. So once again, I'm going to record a check payment here. And you'll see now that my PO is marked as paid. If my vendor comes back and tells me that this item actually costs $500 more, or the shipping costs XYZ, this is where I would go back into my proposal, edit my proposal, and then invoice for the final payment when ready. Okay, so again, proposal to PO, proposal to invoice. You can watch my webinar from last week and see that in fuller detail. But while we're on the PO over here, I want to talk about making payments. Somebody asked how to make a payment to a third-party vendor. So it sounded like they were a part of a co-op, and all of their vendor or POs went through what sounded like a purchasing agent. So the only thing that you would need to, I guess, clarify for this is, where is that payment actually going? Are you paying that third-party vendor, or are you trying to submit the payment, in this case, directly to Loloy? If you are paying your third-party vendor, because I would consider them, I would classify them as your vendor. So here, even though this is a Loloy rug, I'm not buying it directly from Loloy. I would put my third-party vendor as the PO owner. I would put them as my vendor here. And then when you submit a payment to them, or when you record a payment to them, if you're making a payment online via Ivy, you want to make sure that they are set up to do so first. You would simply send the payment directly to that third-party vendor. And that's because if they are the ones that are doing the purchasing for you, Loloy is not your vendor in this case. Your communication ends with the third-party vendor. Okay? So POs are really important, even though they might seem archaic and that vendors don't necessarily use them. Make them. You need to. Okay? And then Anne asked a really good question about, what does closing a PO mean? And this is honestly a personal preference. I could tell you from designers that I speak with and that I've seen post in the Facebook group, I would close a PO once it's been delivered, once I'm done worrying about that item. You can always go back and edit, closed POs, but just in terms of the status, to me, this means I've sent the payment, it's been installed, my client loves it, I'm not going to deal with it anymore. So it's a personal preference, but that is when I would recommend closing a PO. Okay, cool. You guys doing okay so far? Excellent. So with that, we were just talking a little bit about why it's important to create a PO, even if you're not sending it, because it plays into the profitability that you have, that we tell you, the profitability report that you pull on Ivy. So I want to go into, what is the profitability report? How does Ivy track profitability? Because I saw a couple questions come in from designers about that. So let me expand on what is profit. There's two different kinds of profit. There's real profit versus expected profit. So in the example that we just did together, where we went from a proposal to a PO, we said, I gave the example of Loloy comes back and tells me there's a $500 difference. Had I calculated my PO with the expectation, or with my profitability with the expectation that the cost on my PO was finalized, that would be my expected profit. So What Ivy does is it calculates your real profitability. And what's important to know about that is that the reason why you need to understand what real versus expected is because prices can change on the purchasing side. And expected profit would mislead designers. It would basically allow you to think that you're making more or less. We really want to understand what your final cost of the PO is versus what you're billing your client to understand what is your bottom line, how close are you to reaching it. So the profitability report in Ivy shows you the total selling price of an item to your client on the invoice minus the purchase cost on your PO. Again, this is why it's so important for you to create a PO, even if you're not sending it to your client, because this is how we know where your profitability lies. So I can give you an example, but I think you guys might understand already. Expected would just mean what you would expect to make, but the real profit is what you actually paid out to your vendor and what was paid to you by your client. Okay, so again, total selling price minus the purchase cost. So this leads me to a separate segue, I guess, about taxes and tax reporting on Ivy. I got a couple of questions about that. So I wanted to just go over the different types of tax reporting that Ivy has. And I don't know if this was Tess. Somebody asked about how to handle working with different tax rates in one project. So I'm from LA originally. I live in New York now. And in LA, you move a mile and you're paying a different tax rate. City of Santa Monica versus City of West Hollywood versus the Valley. They all have different tax rates. So I can understand how this question would come up, especially in a city like LA. But what's important to remember about Ivy is we are a project-based system, but beyond that, you can think of it in a more granular sense in the document level. So first of all, if you're going to be working with repeatedly the same tax rates, the first thing that you would want to do is go into My Account, toggle over to the sales tax rate, and add the various sales tax agencies that you were working with. Like I said, I'm from LA, I live in New York. These are the ones that I know. Last time I checked, LA County was almost at 10%, so I decided to just round up. But what you can do now is if you are working with multiple sales tax rates, and I've heard about designers who live in some states where services have a different tax rate than products. The easiest way to do this would be to separate the items that have different tax rates. So in this case, in the example that I just mentioned, where services are taxed differently than products, I would separate your product invoice or proposal and your services invoice or proposal, because it will just make your life so much easier when it comes to tax reporting and just when it comes to tax reporting and your accounting side of things. Because otherwise, if you're trying to work with multiple tax rates on one document, it becomes a nightmare. You need to understand which tax rate is associated with which document, each document or with which item. I would honestly recommend just splitting it up into 2 different documents, or as many documents as you need to that pertain to that tax rate. So let me give you an example here. When I create a new invoice, I can just do so right over here for an item. One thing that you'll notice is at the bottom right-hand corner, as I zoom in, you'll see that my default tax rate that I associated with this project is already included here. But I can also select whichever tax rate I need to. So while I might associate one tax rate with this project, if I do have another tax rate that I need to charge my services for, I can simply select that tax rate over here, and you'll see that my tax rate changes accordingly. If this was marked as taxable, once again, you would see the differences calculate automatically. Okay, so I would, just to sum up, when you're working on a different tax rates for different projects or for the same project, I would recommend creating different documents. You can always, by the way, when you're creating your project, you can always go ahead here to edit project. And if you need to create a new sales tax rate on the spot, you could do so right over here when you are creating that project. Okay, great. Tara, how's everyone doing?
Great.
Okay.
Great. We have some good questions coming in, so keep them coming.
Okay, cool. So I'm gonna go through the rest of this. I just have a couple of things that I wanna go over, and I will try to get to everybody's question at the end. Again, if there are any questions that I don't get to, you can always reach out to your dedicated account manager, and I will try to answer as many as I can, though. So I'll just pick up the pace a little bit. Okay, so tax reporting on IV. Let's talk about how IV calculates the taxes. So there are two different types of tax reporting. In general, I'm not talking about IV right now. In general, you have cash recording, you have cash tax reporting, and you have accrual basis, cash basis and accrual basis. Cash basis means you're paying taxes only on money that has been received. Accrual means you are paying taxes on any document, any invoice that you create, even if money has not yet been received. And IV, we handle tax reporting on an accrual basis. And we do this for a couple of reasons, but most importantly, it's to allow for a simpler and cleaner accounting. So what that means is accrual is basically the total value of invoices created in your specific tax period, whether that's monthly, quarterly, or annual, regardless of whether payment was received. Again, it's not cash basis. And so because we do tax reporting on an accrual basis, just like I mentioned before, when we were talking about the proposal to the invoice to the PO, this is why it's so important to only invoice when you are ready to invoice, when you are ready to declare that money. Because as soon as you create an invoice, you owe taxes on it, even if you didn't yet collect that payment. So you really want to make sure that that process from creating an invoice to sending it to your client is instantaneous. You don't want to create an invoice and just sit on it. There are few reasons that you should do so. So let's talk about a couple best practices. Again, watch my I can't plug it enough. Watch my last week's webinar, Set Yourself Up for Success. It will go over a lot of these things. But a couple best practices that we recommend because of our tax reporting structure on IV being accrual basis. The first, collect 100% deposit upfront on your proposal, just like we did in that proposal that we created. And then that way, that payment that you receive on the proposal, when you convert it to an invoice, that payment transfers over, and all you need to do is collect that final payment on the invoice. Like I said, you want that process of creating an invoice to sending it to your client to be instantaneous. So if you're not necessarily working on proposals and you're starting everything with an invoice, you should expect that you need to pay taxes on that invoice, whatever your tax payment period is, quarterly, monthly, whatever it is for you. I also recommend working with retainers. So earlier we saw how I recorded a retainer for a gift certificate that a designer had given to a real estate agent. Retainers are a really great way for you to collect a large sum of money and hold it in liability until it's applied to an invoice. So retainers, the way that you can think about this, you are holding on to your client's money, but it has not yet been applied. So technically, you don't owe taxes on a retainer just yet. You would only owe taxes once an invoice is created. And retainers give you that flexibility, just like deposits on proposals do, to allow you to collect a large sum of money up front and then apply it when your invoice is created. And then another question had come in. Somebody said, I work with, one invoice with multiple items, but I want to be able to bill or collect payment for those items individually rather than as a whole as they come in. Fair enough. This is where progressive invoicing comes into play. And what progressive invoicing allows you to do is to create invoices for specific items and services as they are ready to be delivered. So if you are the type of person that only wants to create an invoice as soon as something has been installed, great. I totally get that. Use progressive invoicing. And I want to show you, so a couple of you might have already had experience with progressive invoicing on Ivy. I actually am really excited. I think next week we are going to be launching an update to how progressive invoicing on Ivy works. So I actually don't have access to what it looks like, but I do have a little graphic. So I'm gonna just share my screen here and show you how this works. So let me go ahead and just refresh my screen. And you'll see over here, you are going to be able to allow progressive invoicing as a default setting in your company. So the administrator on the account would do this. You would simply allow progressive invoicing, click save. And now what you can do is when you are actually creating your proposals, because progressive invoicing essentially originates from the proposal into the invoice, and you're only collecting on money that is actually being delivered, for example. So because we already enabled progressive invoicing, I'm on my proposal, I click start invoice, and I can select the items for which I want to create an invoice. It doesn't need to be all of them. It's not all or nothing. All you need to do is choose the items that you want to invoice directly from your proposal, and you will have an invoice created specifically for those two items. Now you can send that invoice directly to your client and collect the payment only for those items. So this is an ongoing graphic. Let's watch that one more time now that you understand. So it would originate in the proposal. You can click start invoice, choose the items you want to invoice for. And I believe this update is coming next week. It's really, really soon, and I'm really excited about it, but you'll all hear about it. So all you would do is select the items, click continue, and you have your invoice only for the items that you are ready to collect payment for. Okay? So that's really exciting. I'm stoked about that. You can also, you'll be able to, if you did collect a payment on a proposal, you could select how much money you're transferring over to the invoice. It's a game changer. So that's coming next week. And I hope that at least helps answer some questions about best practices due to our accrual-based reporting, tax reporting. Okay. So I know this is a heavy topic. Stay with me. The reason why I call it a heavy topic is because it is a Friday, and Fridays are supposed to be like light and fun. We're talking about taxes right now. So there are 3 different tax reporting. We have 3 different kinds of reports that you could pull for taxes on Ivy. And I'll show you examples of each of these. But the way that you could think about these is from the most general, broad overview to the most granular item-based. So we have 3 different reports that you could pull. Again, we talked about accrual basis. So the reporting on Ivy will show you it's first of all based only on invoices when you're talking about taxes. You won't see any proposals here because proposals are liability. They're not official documents of income. So all of our tax reporting is based on invoices. And it's also based on invoices that were created, not just invoices that were paid. Even if they're open, you will owe taxes according to our tax reporting structure. So the most broad overview is the taxes liability report. And this will literally outline all the taxes that are owed as a company. What this means is you will see all of the all of the money that has been marked, or all of the products and services that you've marked as taxable. And then according to those tax agencies, remember I had LA and New York, according to those tax agencies, how much money is owed. That is overall, as a whole, no specific numbers, but it's good to have so that you can compare this to the more granular reports that you pull from documents and from items in IV. Okay, so taxes liability overview. I'll show you what that looks like in a second. The second type of tax report that you could pull on IV is the transactions report. And when you go to pull a transactions report, it will default to invoices. So the transactions will allow you to select invoices, proposals, POs, retainers, all documents. It will default to invoices. The invoice report, again, invoices are your documents of income. That is what you pay taxes on. Your invoices report is really important. And you can basically modify this to show all invoices that are paid, open, and partially paid. You could choose the status, but I would pull this for all invoices. Why? Pop quiz. Because IV has an accrual-based tax reporting structure. So any invoice that you create, you owe taxes on. Which is why you should only invoice when you're ready to pay those taxes. So when you think about the invoices report or the transactions report, this is on a more specific level. This is on the document. This will outline all of your invoices, the status, the taxable amount, the taxes owed, the balance due. And I'll show you what that looks like. But this is also a really important report. You could break it down across all of your projects or on an individual project basis. And lastly, the most granular tax reporting that we have on IV is your project tracker report. And I love the project tracker. Anybody who joins these webinars knows how much I love the project tracker. We have a full hour-long session just on the project tracker. That's how much I could talk about it. And the project tracker will show you every single product and service on any specific project or across all of your projects. And it provides the tax data per item. So you can essentially compare and contrast all three of these, but these are the three different types of tax reporting that you could pull on IV: the company, the document, and the item. So let's go into examples of what these look like. And I'll start with the taxes liability report. So all of your reports pull into Excel format. Personally, I don't have Excel on my computer, so I import them into Google Sheets. Great workaround if you don't have Microsoft Office like I don't. Just import them into your Google Drive, and it's amazing. So what you could do here with the taxes liability report is you'll see over here, I can pull it, I could specify it for any date range. So if you pay taxes on a quarterly or a monthly basis, you could just select that date range, and it will show you the total taxable amount and the taxes owed according to the agency. This is the broadest tax reporting that we can offer. This is literally an overview. This is just showing you taxable amount and then the taxes owed. And this doesn't indicate whether you paid them or not. We don't know your personal relationship with the IRS. This is just showing you overall how much is due to that specific agency. Okay, and you could do this across all your projects, individual project basis, and you could specify the date range. Okay, so that's overview. The next specific kind of tax reporting is the transactions report. And again, the transactions report, you can be done, I recommend for taxes, the invoicing report, and you could specify the date range, and you can also do this on an individual project or across all of your projects. So here you'll see I have multiple projects. So I did this across all my projects, all dates. And it will outline for me all of the invoices, no matter their status. And as I scroll across here, I'll see my status of these items. I could see the total amount, the total markup, the taxable amount. And again, you mark what's taxable or not on a line item. Taxable amount shipping, total tax amount for the for the shipping over here. And as I scroll across, you would be able to see any record of the payment and the total balance that is still due. So if you have a bookkeeper or accountant, this project will be one of their best, or this report will be one of their best friends. So transactions report on invoices, really great way for you to see the tax breakdown per document. Of course, when you total this up, hypothetically, in terms of the tax amount, it should match up to your taxes liability report. The taxes liability report is the overview. Transactions report is what makes up that overview. And lastly, I know we're running low on time. So the project tracker report is the most granular way to do your tax reporting on Ivy, because this is an item-based tax report. So this will actually break down the taxes that you owe. I'm just scrolling across over here till I get to the cost. It will show you the taxable or not taxable amount for each item. And it will also show you the unit cost, your markup, and taxable shipping cost. And this is what will also, if you want to go even more granular than the transactions report, the project tracker report will allow you to see the true breakdown of item by item on Ivy. Okay. So to piggyback on this, Kelsey, what we were asking about reporting on Ivy, you asked about how to see receivable and payable in Ivy. So the best thing that you can do here, I would recommend to keep it clean and simpler, to pull two different reports and then just combine them in Excel. And the reason why is that the documents won't necessarily line up for your receivable and your payable. Okay, so here, for example, if I want to see my receivable, that would be my open invoices report. So I have my transactions. I can customize the date range for which I'm pulling this report. I want to see everything from the last week on a specific project or all my projects. And this would be open, and it would be the invoice report. Alternatively, I can also pull an open purchase order report or a sent purchase order, so that I see what's been sent but not paid or partially paid. You can do the same thing when you go into a specific purchase order report. You could see the status of your documents. So I would personally create two different reports, one for receivable, one for payable, and then merge them together. Of course, as you know, Ivy integrates with QuickBooks Online. Why is this important? Because QuickBooks Online, all of the information will push over to QuickBooks, and then QuickBooks Online has like 70 customized reports that you can pull. If you want to see both accounts receivable and accounts payable on the same report, profit loss on the same report, connect to QuickBooks Online. That is the beauty of Ivy, where you have an easy-to-use system on Ivy, and then you could pull as detailed reports as you need to on QuickBooks Online. Okay? Okay, perfect. So I actually want to turn this over to the questions that that have come in from users throughout this webinar. Like I mentioned, I know that there were some questions that had come in that I didn't get to, but I will try to answer them. I will also ask your dedicated account manager to follow up if possible. But you always feel free to check out our Help Center, our Ivy Training Center. The link is below where it says Access Ivy Training Center. And also watch last week's webinar for those who have questions on best practices and how to set yourself up for success. It's really good. Okay, perfect. So with that, I will open the floor. Tara is going to just assist me in showing me some of the questions that came in. So just a moment. Thank you so much.
No problem.
Perfect. Okay. Tracy, I see your name again. Go back up. Tracy, thank you so much for joining me every week. It really means a lot to me.
So Tracy had a very specific QuickBooks question. Mm-hmm. Tracy, you asked, why would proposals show as linked with QuickBooks? Mm-hmm. That you see a green dot, and you're asking if they should be treated as a quote if you order it. and should it link the invoice and PO as linked in QuickBooks?
Yeah, so I didn't want to touch too much into QuickBooks, but basically our integration with QuickBooks, everything that you create in IV, proposals, invoices, or POs will sync over to QuickBooks Online. So it will exist in QuickBooks. You will see that green dot. That's great. That means that it's there. When you link a document in IV by originating with a proposal and then converting it to an invoice and converting it to a PO, they will be linked together. But one benefit of creating proposals in IV is that you can collect a payment on it, whereas in QuickBooks Online, you cannot actually take payments on proposals or estimates, as they call them. So you will see that because that's how our integration works.
Great.
Okay.
Tammy, you asked, is there a way to print an invoice showing all payments applied?
Yeah, so when you go to an invoice, let's actually test this out, but when you download a PDF of an invoice, it should show you the payments that were applied. So let's go ahead and go to this invoice that I have over here. And I'm just going to record 2 different payments here. I'll record one cash payment. I love cash. I'm simply going to apply $400 here. And let's also record another payment for the remainder balance. I will apply my retainer here of 1,252,53. Great payment. And let's go ahead and download this as a PDF. It should show the balance that was paid, and I believe it shows the breakdown, but I just want to confirm with you on the over here. Okay, no, so it shows the amount received over here. It shows the total amount received. So what's good about this is that you can either print this, so to speak, this application. It shows you all the different payments that you received. You can print this out as part of the download PDF. You could just, print them and staple them together. Alternatively, you can also pull a report, a project payment report, which will show you the breakdown of all of the documents within a specific project and then the payments that were received and applied on that project.
Great.
Okay.
Thank you.
Yeah.
Annie asked, how do we see how much profit we've made in markup on a particular invoice or proposal?
So Annie, the way to see this is if you're talking about true profit, as we talked about earlier, you would need to convert an invoice to a PO because that is how we track your profitability is money coming in minus your purchase cost. However, in edit mode on the invoice or the proposal, if I scroll down over here, what's really amazing is you'll see this little eyeball right over here. All I need to do is click on the eyeball and I could see the total markup. So that gives me a quick glimpse of the profit that you're making, which is essentially your markup.
Okay. And so this is showing profitability per individual project. Karen is wondering if there's a way to see profitability of your firm as a whole.
Yeah, so when you pull a profitability report directly, not from the project tracker, but if I were to pull a report over here for your project tracker, and you'll see I have all projects selected here, and I can specify the invoice dates over here. I can just toggle over to profitability, and this will pull a profitability report for all of my projects. So when you do it specifically here from the report section, this will pull it across your project trackers across all of your projects as specified over here.
Great. Monica is asking specifically about POs. What do you suggest doing in terms of shipping charges? Yeah,
Monica. So in terms of shipping charges, there are a couple of different schools of thought here. And that reminds me, somebody had asked about best practices about how to bill for their design time. These are questions that you can always ask in our community just to see how other designers are doing it. But in terms of shipping charges, if you know the shipping cost or if you have an estimate of what the shipping cost is, I would include that on your proposal. You have a line on your line item, you can include the shipping. And then I would transfer that shipping cost over to the PO. You'll see when you create a PO, you could just click include shipping. And what's great about that is it will carry over. And then you can also, if you're including a markup on shipping, what we're doing right now is we're updating the profitability report to show also profit from markup or from shipping markup specifically. So in terms of shipping, I would include it on the PO. Some designers will only collect shipping at the end of the project once they've gotten it from their vendor. Another designer I've heard will incorporate shipping into her markup and then bill her client separately for white glove delivery. So a couple different schools of thoughts. You can always ask our community to see what they do as well.
Great. Kelsey, this is going to be our last question. Kelsey is asking,
okay.
Kelsey, you can reach out to us.
Yeah, Kelsey, you can reach out to us. Somebody's asking about, can you make custom names for categories? Yes. We talked a little bit earlier about categories on Ivy. Here, all you need to do is go to manage categories. I'm in my product library, and you can create as many categories as you need to. We do have defaults, which are not editable. But when it comes to QuickBooks, if you have QuickBooks support included in your membership, reach out to our QuickBooks expert. Otherwise, I highly recommend upgrading and getting QuickBooks support. It's $29 a month, and you can set up a call with our QuickBooks expert, Andy, at your convenience. But here, all you would do is just click add new category, and you can create custom categories for products and services. Okay. So with that, I want to just let you know, please email me. I'm going to send you all a recap of this. I'm going to send you a recording of this webinar. I'm also going to try to get your questions answered if I didn't get to them. But I certainly hope that helped. And always feel free to reach out to your dedicated account manager. In September, in a few weeks, September 13th, we are having Ivy Academy in Irvine. It's going to be an amazing day with Ivy learning as well as industry learning. We are having breakout sessions, panels. It's our community brought to life. And it's an opportunity for you to connect with other designers. So definitely check that out. You can go to ivy.co/Ivy Academy, Ivy-Academy. And also, when I email you that recap of today's webinar, if there are webinar topics that you think would be helpful for you and other designers, let me know. I am so happy to do whatever would help you guys. And I want to make sure that you know how to use Ivy. So definitely make sure to let me know. In the meantime, I really appreciate you guys talking tax and advanced questions with me on a Friday. I hope that this was helpful, and I can't wait till next week already. So have a great weekend, everybody, and we'll talk soon. Thank you.